Good afternoon. Good afternoon, one and all. Hopefully you're well. Right, make sure that I'm coming through okay. Someone give me a thumbs up to show that, prove that you can hear me okay. And I'll get going. I've done, in the past, I have done a stream, about an hour. Wasn't looking at the chat and realised I hadn't been broadcasting. Spoke to myself for an hour, which isn't too uncommon, living in a house with 4 women, so I speak to myself most of the time, I guess. Right, let's have a look who we've got in the house. We've got Pankaj. Good to see you. Metaberg. This is one of your favourite pop firms. Good to see you here. Favourite pop firm, unfortunately, not passed any of your 5 challenges I have with them. Say hard luck. I will say hard luck, but why, Metaberg? Tell me why you think you haven't passed. Tell me everything that you think you're doing right and everything you think you're doing wrong. Share it with us, because we all learn from other people in here as well. So be honest. Why haven't you passed 5 of the challenges that you've done in the past? Because you're not alone. A lot of people failed for just a couple of times to get going until they realize what they're doing wrong. I mean, we've got people passing all the time as well. Here we go. I passed 2 pop firm challenges, and I'm looking to sharpen my edge with FTP, says Abu Kaka. I've got that name wrong. I'm sorry. Tell me what you're doing right. Why have you been able to pass 2 pop firm challenges? What's your secret? Is it risk? Is it trading less? Is it trading more? Is it trading maybe with algos? Share your secrets with us here in the chat, and I'll put you up there in the lights as well. Right, okay, let's go, says synthetic trader. Ulair, good to see you. If this is your first time joining in with me on a Monday, we do this each and every Monday at this time. It's basically a review of the week ahead. We'll talk briefly about what's been driving the markets over the last week. Then we'll look at the main drivers of the week ahead, things to be on guard about, things that you need to be aware of. Even if you're not trading the fundamental news, I think it's really important that you understand what is, of course, going on. After all, we are traders and we need to know the underlying reasons why our markets are moving. And I often say, if you've got the fundamentals agreeing with your technicals, you have got a grade A trade potential there. So it's good to have the backup of the fundamentals as well. So that's basically what we'll do. We also give away some assessment accounts as well. We give away 2 $12,500 assessment accounts to two, I was about to say lucky winners, but they're not lucky winners because they predicted the price of gold for the end of the week. And basically we do that each and every week. The idea is to guess the price of gold by the end of the week. Now, two winners from last week. By the way, this week's competition is up already, so we'll put the form up in a second in the chat so you can get your guess in. There it is. Yeah, it's just gone up. Sorry, I beg your pardon. The guess, the Gleam form has gone up. So last Friday, June the 6th, gold closed at 3314. Well away from where I was calling it. I called it 3415, I think it was. So I got that pretty wrong. Gold pretty much closed where it opened. It was only, I think, $6 different from where it opened on the Monday when we were speaking about this time last week, and it closed. It had a bit of a pin bar, but the numbers that we saw on Friday put it all back to where it all began. In fact, the whole week's been pretty like that, really. The whole week's across quite a lot of asset classes basically closed unchanged on the week. So the two lucky winners from last week, or the two winners from last week are, here we go. If it's on my screen, should be on my screen. We got Abdo from Morocco and Uncle Jay from Kenya. I've got a feeling that Uncle Jay maybe isn't his real or her real, not his real name. But of course, you need to put in your name and of course your email address, and that way you'll be notified if you do indeed win. So congratulations to these two. Well done. You will now get a $12,500 assessment account, and treat it seriously. The fact that you've won it doesn't make any difference. Treat it seriously. Control your risk, and make sure that you're following a strategy or following a system. So it's something you've planned out rather than just shooting from the hip and taking trades or willy-nilly, as they say. Simon Strutt is in the house. Good to see you, Simon. Panka says his secret, big risk reward, and I only risk 1%. Okay, yeah, 1% risk is good. I did a webinar last week. I don't know if anyone saw that, where we basically shared some secrets. 1% is traders that are risking more than 1% have much more tendencies to fail, and that's just what our data shows. So risking 1% is about as much as I would want to go on this. But yeah, thanks for that. Thanks for sharing your secret there. Big secret is risk to reward. What type of risk reward are you getting, Pankaj? What type of risk reward do you go for normally? Hi, Aaron. Hi, Tristan. Good to see you today. Good to see you. Pip Hooray is in the house. And Sophie Fifi is in the house as well. Ula is in the house as well. So there you go. Right, our competition is now open. You've got to have this in by 1:50 today. Okay, so if we last to 1:50, it's very quiet markets, so we might not drag it out to 1:50 today, but we'll see how we go. Of course, if you want me to look at anything in particular, do let me know, and I'll see if I can analyze it for you. So there you go. Get the entries in. The form is on the in the chat, the Gleam form. Let's have a look at gold. What I think gold is going to do. Gold has had as I say, a really quiet, not quite weak, but this is the weekly candle. The weekly candle is, where is my weekly? You will see basically we saw. That's not gold, is it? That is gold. That's silver. So gold, basically, that's where my guess was last week, miles away. Okay. You had this, I think they call this a gravestone doji, is it? Indecision. It basically opened and closed at exactly the same level, having had a spurt higher. So we were up reasonably good at one point. My 3415 was looking very good, until we had a non-farm payroll on Friday, which basically came in stronger than expected, which basically saw the the US dollar pick up a little bit in strength, and picking up in strength normally affects the price of gold to the downside. So we saw gold come under. So I was looking good until those non-farm payroll numbers came out. And today we've got another. That's obviously the weekly candle, but if you look at it, well, same as the daily, wouldn't it be? Because it's only day one of it. So at the moment we're seeing gold not doing very much. One thing I talk about all the time when I'm analyzing the markets are the two strategies that I really trade and indeed coach people in if they're interested. It's the boomerang reversals, and you're seeing, and the main sort of focal point of the boomerang reversal is looking at key levels of support and resistance. I always call these roadblock support or resistances. We use them for reversals, but we also use them in our trend following as well. We don't take our trend trades through a roadblock, resistance or support. It's going to be the hardest trade in the book because everyone wants to be in a trade all the time, don't they? But sitting on your hands, as I say, is the hardest trade. The roadblock resistance in gold at the moment clearly is up there at 3,400. Sorry, 3,430 up there at the moment, which is basically where we rolled off. Where we dropped what it was, that's about 10% last time we got up there. Now this time we've made a push to these levels again. Okay, this would indicate a potential reversal coming into gold. Now we're ways away off it at the moment, but on the longer term price charts, and again, longer term, pretty dull, pretty boring, but often is the recipe for greater chances of success by trading less. We are seeing a potential reversal in gold if it breaks down through this zone here, the swing low that led to this failed swing high. So we've touched into this swing high a couple of times now at 3,400, pushed it in there, had this attempt at it as well. And now we had the swing low. Basically, all trends have their pullbacks as well. We're going again, and this attempt at that previous level of resistance, 3,430, it basically failed to take out the previous high. Okay, so this is showing you that the buyers in gold, and there have been significant buyers, institutions, central banks, it shows us a clear bit of price action here that the buyers are running out of steam. If we break the swing low that led to this failed swing high, we could see a potential reversal in gold. Might be a 3 or 4 weeks in the making, this trade, but I don't care how long I'm in the trade. If it makes me decent return, then I'm happy to sit there in the trade, as long as obviously the swap doesn't kill you too much. So we'll basically be looking at the break of 3,200 really. If gold does break 3,200, you can look gold back through 3,000. I mean, I actually love gold at the moment. I mean, but I'm just talking about it from a technical standpoint. Gold is mostly going to come under pressure if we break 3.2. Again, it's a longer term trade. But I see these, sometimes you might just take 2 or 3 trades a month with these long term swing reversals, and they can be very powerful. I've seen people pass prop assessments just on 2 or 3 trades using these big larger time frames. So there you go. But one thing I'll talk about in a moment, once we talk about where we are last week, I'll talk about possibly my pick for the week, and that is silver. But before we get into that, let's have a quick look at the main drivers from last week. Before I go on, this is purely for education purposes and not intended for as financial advice. So do not place trades on the back of what I say here in this stream. The stream is about an hour. Trading is much more complex than just trading what someone else says in an hour's stream. I give you my views, I give you my biases, but do not trade these. You need to apply your own strategies, your own analysis, and take responsibility yourself. I get calls right and I get calls wrong. You saw my gold call last week. It was very close to being almost bang on the money, but ended up coming back. to 3% in the end on Friday, I think it was 2%. So yeah, this is meant for education and possibly entertainment. You tell me if it's entertainment. Simon Strut's going for 3251. That's all very good, Simon. You need to get that on the Glean form, which is posted there in the chat above. Right, the main drivers last week, just talk a little bit about the fundamentals, what was driving the markets last week. First of all, you had the European Central Bank. That was on Thursday. The ECB cut their interest rates by 25 basis points and basically said what we expected them to say, that they will be data dependent. But what I deemed from that was, that she was reasonably hawkish in that basically not really giving any clues of another rate cut down the line. Almost pretty much said we're almost done on rate cutting, which is clearly is supportive of the euro. So the euro performed slightly better. We call it a hawkish cut. So it was a cut in interest rates. Normally, when you see a cut in interest rates, you'd expect the currency to follow. It's on the Glean. Well done, Simon. But of course, the forward guidance, she was a little bit hawkish. So so the euro has been was reasonably quite strong, although the euro dollar again flat on the week. And also we had on Friday, we had non-farm payroll. Again, this came in slightly stronger than expected. We saw an uptick in the jobs, and we also gave away a couple of assessment accounts on the live stream. We streamed it live. Always stream live the non-farm payroll and give away some accounts as well. So make sure you subscribe to the channel here so that the next time we do come on live. I am going to come on live periodically when we have big news events such as non-farm payroll or PCE or something like that. So it's always worth making sure you're in the loop by subscribing to the channel. Anyway, non-farm payroll beat to the upside. And we also saw an increase, an uptick in average earnings. Average earnings came in stronger than expected. And that basically has pushed out the potential rate cut to further down the line now. I always talk about the CME FedWatch tool, absolutely free. I'm not affiliated with them at all, as you know, but this is where you can get to see what the futures markets are saying in terms of rate cuts and so forth. This is based on the actual futures swap market. You'll see at the moment the rates are 4.25. Follow my mouse. The 4.25 range for the next meeting, which is on the 18th of June, which is next week. And it's no chance of a rate cut. If you go out to July, okay, we've got only a 17% chance of a cut in July. And really September is when they are expecting now rates to be cut. Okay, this changes obviously with the economic data that's released throughout the week. But at the moment, this has basically been pushed further down on the back of reasonably strong job numbers that came out last week. So that's why we always look at the fundamentals. At the moment, the dollar is weak, but could be finding a bit of support with all the other central banks like Eurozone and what have you cutting their interest rates. The Fed maybe sitting on their hands and may find a bit of support in the dollar, although the dollar's had a torrential beginning of the year, isn't it? First half of the year. So that's non-farm payroll. Main movers last week. Again, a lot of these gravestone dojis last week. A lot of dojis. Dojis are when the markets are undecided. It's basically when you see, markets up and trade open and close the week on at about the same level. Although I say we did have some volatility, but they just had the pullback on Friday, which made everything change, go unchanged. Gold pretty much unchanged, as we've just shown. The dollar was unchanged on the week. It was about 0.2% stronger, but really it's unchanged. You had Bitcoin unchanged. I mean, I've not seen Bitcoin unchanged for a long, long time. It shows you that market is really just uncertain about where we're going to go. S&P 500 stocks slightly risk on. We got the currency market showing that as well, with a bit of a risk on, supporting the Australian dollar and the like. Australian dollar, New Zealand dollar, these commodity currencies were the outperformers. which is a risk-on environment. S&P 500 was up about 2%. DAX was up about 2%. FTSE was up just under 1%. But of course, the biggest mover of the week was Tesla. Tesla shares down 14%. I think I've called that one wrong. I said on Friday, I think Tesla, these levels could potentially be a buy. Not that I trade the US stocks, but I thought, well, all that bad news is out. I mean, they've got to start making a peace at some point. However, over the weekend, Tesla had a couple of downgrades from some of the rating agencies. And obviously the brand sort of tarnishing of the brand with the fallout with Trump, Musk and Trump falling out, it doesn't do the brand any good. So by the looks of things, Tesla is continuing its move lower at the moment. At some point you're going to find a bottom, but there we are. That's the main mover of last week. Nelson's gone for 3421. Maybe. Jamie's gone for 3012, 3012. Yep. Well, thanks for sharing them. Yep. But remember, for you to be considered a winner, you need to get it on the Gleam form, which I'm sure you have done. Okay, so what's going on this week? We'll scan through quickly around the economic calendar. I know some of you find this useful, but I don't want to dwell too much on it. Today is a holiday in the Eurozone. Okay, so the US have only just come in. So for the first 3 or 4 hours of today, Asia was coming to a close, but really there's just been nothing going on. I mean, everything is really, really flat. I was looking at the stronger Aussie dollar, and I was looking at Aussie, and I was looking at the pullback in the Canadian dollar, looking for opportunities there, but really nothing's going on. And it's times like now that you really should think about, sitting on your hands or going off and doing some back testing or something like that. Don't trade just for the sake of it. I think it's a tendency on a Monday to jump into trades just for the sake of it because you've had 2 days chatting to your spouse and now you're on your own. You've got a chance to do something. So you just feel you want to trade. But days like today is days maybe you should be sitting on the fence a little bit. Okay, so that's the holiday today. It is a bit of a quiet week, actually. Tomorrow we've got UK data. Okay, so markets are bracing themselves for the average earnings. Expected to come in at 5.3% from 5.5%, so slightly putting back on average earnings. Claimant count up to 9.5k from 5.2, and unemployment rate is going to tick up a little bit. Okay, so why is this important? Average earnings is important because it's inflation. If people are earning more money, it means they spend more money. If they spend more money, prices go up. Prices go up, interest rates should follow or stay higher. So we keep an eye on that. But I think here there's a bit of a mixed bag of information coming out here. If it comes out in line, inflation is coming down, but unemployment is ticking up. So if that is the case, how do you call sterling movement on the back of anything that comes out there? I don't know, difficult one to say. But anyway, it's 7 o'clock in the morning. If anyone's interested in trading, the pound normally does move a little bit on the back of it. So if you are trading, just be aware of that. Don't be trading at 5 to 7 in the morning, just as we're about to go into an announcement such as the unemployment. Hello, it's a correlation goal. We're back to bullish direction soon, I think. Yeah, maybe. I like silver. I'll talk about that in a second. Wednesday, we've got I suppose it's the most important data release this week. 1:30, we've got CPI. CPI stands for Consumer Price Index. It's basically inflation. Tells you what prices have done. And we look, the core basically takes away the sort of the volatile components. We really look at the year-on-year CPI expected to show an uptick to about 2.5%. Remember, anything higher than 2.5% or indeed 2.5% showing a movement up on inflation is just going to sort of confirm that rates in the States are going to stay higher, maybe indeed until September. It's only if you see this number really dip lower are they going to start thinking, hang on, we may be putting these rate cuts in sooner. So we pay attention to that. 1:30 on Wednesday. On Thursday, we've got a GDP out of the UK. GDP is basically the economic health of an economy. It stands for gross domestic product, GDP. It basically is the country's bank account, if you like. And as you know, this is a monthly figure, down 0.1% of the month. That's nothing in that, is that? You've heard the recession talk. Well, the recession is if you have 2 quarters back to back negative growth constitutes a recession. But this is a monthly figure, so people look at the monthly figure to get a gauge where the quarterly figures will be. And then in the afternoon we've got another inflation data point, and that is the core producer price index, expected to show an uptick in prices at the factory gate, and the index is expected to rise from negative month last month, down 0.4, and the core down. Sorry, the core was down 0.4, and the producer prices was down 0.5. So we expect to see a price increase there. Again, keep an eye on that. If these prices are higher, inflation's higher, rates are going to stay higher for longer, dollar could find itself in a bit of a supportive mode. And I think that's quite possible anyway. We are coming into some levels across a lot of the asset classes at the moment where, remember, everything's really linked, everything's correlated. I'm going to talk a little bit about correlation in a minute, but everything's sort of, sort of quite well correlated. And the dollar has been in a downward move. We're getting into some certain levels where for those of you that are trading my reversal strategies on the higher time frame charts, you might want to be looking at potential levels coming in. And if the dollar does find support, that's going to affect a lot of these other asset classes for a potential reversal. So 130, we got unemployment out as well. That's just the weekly unemployment level. Not really watched these days, to be honest. And in fact, I don't even watch it myself these days. I put it on the screen because it's a red number on the calendars, but I don't really think it's that important. And then on Friday, we've got consumer sentiment. I know central bankers like a consumer sentiment number. It basically is a forward-looking indicator. Are people confident about it going forward? Anything above 50 is deemed to be expansionary. Anything below 50 is deemed to be contracting. So we'll keep an eye on that. Okay, so thank you for that. You got here's the answer. So he's passed 2 prop accounts so far. It came down to patience and sticking to my strategy with 0 emotions. That's what helped. Well, right there, you have got an education lesson. You've got it exactly nailed there. Sticking to your strategy, that's the biggest challenge. Anyone that's been following me over the years will know my sort of my trademark video. I think it's got over 5 million views on YouTube and growing daily. Is the cycle of doom, where traders are constantly changing strategies, ditching strategies, tweaking strategies because they don't like those losses. We all have losses, but unless you're confident and don't control emotions, changing strategies is the most damaging part. Always looking over the garden fence for the next strategy, or looking into another chat room. Some blokes just posting nonsense in the chat. We get them on our chat all the time. People just posting wins that they've had. And everyone thinks, oh, well, that's a good strategy. Well, that's obviously bonkers to be trading like that. A trade with 0 emotion. I'm always toying about that one, Abakar. Can you trade with 0 emotion? I don't know. I've been trading for 35 years, well, maybe even more than that. I don't know if it's 0 emotion, but what I can do is control emotions. And I can also keep myself away from circumstances that enhance my emotional state. I don't know if I can ever trade with 0 emotion. I don't do the phone thing. Look at my trades when I'm out and about, away from my desk. That's just a sure, fast way to being too emotionally involved, because you're looking at the ebbs and flows of your P&L, which absolutely means nothing to your success or failure as a trader. So why put yourself through it? All it does is enhance your emotions. But yeah, controlling your emotions. Don't look at the phone when you're away from your desk. Set aside your 3 hours a day, or your 5 hours a day, or your 8 hours a day that you're going to be trading. Only trading your strategy, having a strategy checklist, always having a checklist available to tick off when the trade setups to make sure that you're keeping in line. Yeah, so thanks for sharing your successes. Anyone else want to share their experiences? I'd love to hear where you're coming from as well. I don't know why that came up. Dear. Right. Okay, so let's have a look then at the markets today. Now, one thing, as I say, I was looking at, gold's had this fantastic run. Okay, over the last well, pretty much, gold's been rising. Golly gosh, look at gold rising from September 23. So getting up for 2 years now. We've been on a 2-year bull run in gold. I was kicking myself. I was holding quite a lot of gold ETFs, and they just weren't working. But finally, they've taken off for me now. So I'm actually now seeing a bit of a return on my investments, my gold investments, which is nice, because I thought at one point I thought I just picked the wrong stuff, but they just seem to lag this time around. But there we go. So gold basically is up, 88%. Wow, in 2 years. 88%. But look, gold is coming into a bit of a resistance at the moment, as with other asset classes at the moment. But what I've been looking at really is silver. Okay, silver has really underperformed. But silver in about the same period, is only up. Silver is only up about 60%. So silver and gold, you've got gold up 90% and you've got silver up about 65%, 70%. So silver has really lagged behind gold. Now I see gold getting up to these levels. Gold's becoming obviously quite expensive. It's quite expensive to hold the actual bullion itself. It's getting quite expensive. Obviously, you have to pay for central banks have to pay storage and what have you. But I'm seeing now that maybe there's a lag behind with silver, and silver is possibly taking on now some buying interest from the sort of large institutions, from the central banks. We had a silver level at 34,000. This level here, 34.83. Right, we've broken through there only last week. So just last week alone, maybe I should have put that on my window. Last week alone, silver is now up. Silver is now up 10% in a week. So when gold did nothing, silver's up 10%. This is now getting the attention of other investors. So just keep your eye on silver. You never buy tops of candles. You never sell bottoms of candles. You basically wait for the pullback. Wait for the pullback and looking for your entry. My entry, in fact, I am long silver now, but if I wasn't long already, my entry now would be waiting for a pullback. When you see candles like this, guys, look, when you see this is a 4-hour candle. 4 hour, and look at here, you had 1, 2, 3, 4, 5 4-hour candles. That's basically a day candle. When you see that type of movement through a level of resistance, and you will agree, I know you'll agree, because you're like that, you'll agree that that is a level. You'll agree also that that level comes back. When's that from? That's from March of this year. When you see these solid green momentum candles pushing through these levels, that is not you and I on our MT4 and MT5, or on our trading view, or on our prop accounts. Right? That's serious money going in there. That is institutional money. That's central bank money. That's showing you that there's buyers in there. Now, I remember from my days in the city as an institutional trader. If I was trading UK government bonds, and so we were market makers in UK government bonds before I went on to the futures floor. If one of the pension funds or whoever, we made a market and they hit us with 500 million or 50 million long dated UK government bonds, we had an exposure. we need to offset that in the futures market. So we'd sell some futures to make sure we didn't get too exposed. But we're not going to shove in 10,000 contracts at one go into the futures market, because we're just going to get smashed and killed. We split the orders, you split them in. That's exactly what it is when you see this type of institutional flows. You see markets respecting these levels when they come back down to retest them. So I am assuming here that if we pull back, the pullback to previous levels of liquidity is where I'll be entering. So I quite like the pullback to this zone here. It's a longer term pullback. If it doesn't happen, it doesn't happen. But that level there, which would see silver come back down to 34.70, and it was there just a few hours ago, that level is going to be supported. Now, if you're selling here, then that would be my profit target if you're looking for a reversal. But if you're not looking for a reversal and you want to get on to what is a 2-year trend, that would be your level. Seeing the momentum of this green, all these green stuff, candles, and then this green candle smashing through that previous high, that's your level. So we'll look to see a pullback into there and to take the trade higher, and your stops can be below. Well, in this case, you can have stops below this support zone. This is going to be what I would call a roadblock support. Okay, so I would be looking at that as a potential trade. And looking back here again, now just further confirmation. This setting, look, this is exactly the same, but in reverse. That's where it all began. This zone here is going to be respected. You can mark my words for that. Now, of course, I have to put that disclaimer window up again, but this is going to be respected on the downside. So that would be my little trade idea for the week. There you have it. Let's have a look here. What's someone saying? Edward says, Overholt, isn't the spread of electric vehicles supposed to cause a huge increase in demand for silver? Maybe a good long-term investment. You're talking about the catalytic converters. I don't know. I don't know about that. Is it right? Gold rate today. Maybe I'll look into that. But didn't the US basically kick the boot into electric vehicles last week? Certainly, he's removed some of the subsidies, isn't he, from EVs? He wants to see growth in combustions and electric vehicles. So that's why Tesla's one of the reasons why Tesla's down, I guess, and also the spat they had as well. But yeah, interesting. So that's my basic look at that. Let's have a quick look then at the currencies. As I said, this is the risk on environment at the moment. The orange line is the Australian dollar. The grey line is the New Zealand dollar. Okay, these are the commodity currencies. The purple line is also a commodity currency. It's the Canadian dollar, affectionately known as the loonie. That is actually under pressure at the moment. But you'll see the dollar is coming a little bit. I have this on the 4-hour chart. You can have this if you're scalping, for example. This is really useful if you are scalping. Having this on the 1-hour chart. Talk about picking your trading battles. Are you going to be scalping the pound, euro pound at the moment? Euro pound is going nowhere. I can see the euro is the blue, the white is the pound. If you're scalping that on the lower time frame charts, 15-minute chart, it's not moving anywhere. And I haven't even looked at it yet, but I can tell you now, if I put up the euro pound, it's going to be doing pretty limited stuff. And you see there it is just in range at the moment. So if you're scalping to get inside this stuff, it's really difficult. But you've got the clue there from here. So what you want to be doing is looking at things that are moving away from each other for trend and converging for counter trend. Okay, so at the moment, you're seeing the Canadian dollar actually is weakening up. Aussie CAD now could be reversing today. I liked Aussie CAD earlier, but it looks like it could be in for a bit of a reversal just from that screen there. The Aussie against the CAD. Let's have a look. Aussie CAD. Okay, so this could see, I mean, there's nothing there for me on my strategy, but looking here at the daily, okay, so would you agree that this zone here, which led to that big move, is a resistance zone? Would you agree with that? I think you'd agree. Okay. When you see that on the higher time frame chart, then you drill down to the lower time frame chart, and here you have it. A test of it. This is the boomerang reversal right here. Happens on a few of them. Comes into resistance, pulls back, has a go, fails to take out the previous high. That is your break of structure. If you're trading my boomerang reversal, you are now short this. You're short with. That's not very useful, is it? Let's just get out the short position. You're short here. It stops above the swing high. Profit targets. Well, you can have 1 to 3 there. 1.3 to 1. But quite honestly, you must probably got potential longer term for this to get back down. I'd say 50% of that move would take you to about there. But the bias now is for the Aussie CAD to reverse, and it's just coming back up to test that level now, the break of structure. I think this is potentially is going to roll back over. Do not trade that now, unless you understand what you're doing. Unless you trade boomerangs, then you don't want to be trading it. But the Aussie could be coming under a little bit of a pressure. Look at the Aussie against the dollar. I mean, a lot of these are coming in, as I said a moment ago. A lot of these currencies now are coming into, with the dollar weakness, are coming into significant levels. Look, this daily, we bounced off it 1, 2, 3, 4, 5, 6, 7, 8, 9 days we've been trying to get through here. Right? It's a key level. If this fails here, breaks, then you might see some dollar strength coming in. It's happening across quite a few different currency pairs. You're coming into these levels here. Look at you can look at excuse me, turn that off. Pound against the yen, all related, yeah. Look, all coming into these levels. There's lots of big levels coming in that we're coming into at the moment. And remember, if you're trading Forex, you've got to be aware of the correlation. The dollar has been in a huge selling off period over the last few months. Okay, then you have to look at the DAX, not the DAX, the DXY even. Yeah, the DXY. Yeah, this is the US dollar. US dollar has down since beginning of the year almost 11% for the world's #1 currency, reserve currency. You know, and we're coming into some levels. So this dollar could indeed be looking for a bit of a bounce. Right? And indeed, if on the DXY, using our boomerang methodology, hits the low, pulls back, comes down again, fails to take out the previous low, that reversal, if the dollar edges up past this zone here, I think this is an indication. It's not for today, but keep an eye on it. If this dollar gets past the zone here, we could be in for a bit of a reversal in the US dollar. And that's going to have a knock-on effect on most of the other currencies. Yeah, even if you don't think they're relevant or related, they are. Say, look, pound yen, same thing. Aussie yen. That's the level. This is the dollar strength level here. I was long Aussie yen I closed it on Friday, but it looks like it's going to move off now. I closed it on Friday just to get out for the weekend, unfortunately. There you are, looks like it's taken off now. But anyway, that aside, I closed it at 94.04, so there's nothing really in it. So yeah, I mean, as I say, if you're trading the dollar, you need to be aware of the correlation. Most of the currency pairs that you don't even know sometimes are correlated. They are. So when you pick your particular trade up, and you think this is the best trade, it might not be the best trade. Look around the others because they are all, say, correlated. And if you don't know what the correlation is, well, there's various ways you can look at correlation. One of the ways that I talk to my students about is using this. This is just basically, there it is. It's mataf.net. I don't know who these people are. I've never, they're not, I know who TUI are. They actually messed me around last year. TUI. God dear me. Yeah, this is the correlation table. As you can put them in here, different time frames, 4 hour and what have you. Any high number means their pair is correlated quite heavily. So did you know, look here, that the pound against the Japanese yen, if you're trading the pound against the Japanese yen and you're trading the Australian dollar against the Swiss franc, they are going to move in line at the moment. So if you buy something, you buy the pound yen and you buy the Aussie Swiss, you're doubling up your exposure almost. It's 83 correlation. Anything that's got strong correlation is a high number. Anything that's got a weak correlation is a low number. A negative correlation, again, it means they're just moving opposite directions. Pound, would expect that pound, euro, pound, and pound Swiss to be negatively correlated, obviously. But euro, pound, and dollar Swiss are negatively correlated. One will move in opposite direction. Did you know that? Well, now you do. Yeah, that's Andrew's momentum meter. Jamie, yeah, that's on. I'll come to that. I'll come to your question in a moment, Jamie. Yeah, it's on TradingView. I'll show you in a second. So look at something like that. As I say, you can use these people. I mean, if you just Google Forex correlation, I think these come up pretty close. But I mean, I've always just used this one. I'm in no way related to them. We're not related to them in any way. It's just something that I found to be very, very useful. So if you've got multiple currencies going on at the same time, be aware, are they correlated? If you get stopped on one, you're going to get stopped on three. That's why I've often seen in the past when I've reviewed failed accounts. So I look at what people are doing when they fail and try to pick out patterns of what they're doing wrong. And I see clusters of failure, clusters of losing trades. And I look at, I can see straight away they just over correlated. And I look at that, and obviously if they ever want to come on and talk to me on a private chat, I can talk to them about their trading. But it's just very, very apparent to me. Right, you've got about 4 minutes left for this Guess the Gold. 4 minutes to go before we close that off to you guys. So there you go. My view, I haven't really given my view on gold, have I? What do I think? What's my pick for gold this week? I'm normally getting it. Well, I got it wrong last week. Gold for me. Do you know what? I think gold's gonna. I think the dollar. Looking at the data last week, we had some strong numbers in the non-farm payroll, average earnings. I think trade talks going on today with China and the US in the UK is actually meeting here in London. I think trade talks potentially going to be good for the US dollar. I think the dollar is going to in for a bit of strength. I wouldn't be surprised using my boomerang reversal methodology to see gold trade lower this week. Okay, so my view on gold is that we're going to certainly breach 3,300, and I wouldn't be surprised to see gold settle even a little bit lower. 3,215 is my pick for gold. What do I know? So there it is, 3,215. Don't just copy me for the week. Gold is very volatile today, no direction. Yeah. Well, it's not doing anything, is it? You say it's volatile. I don't think it's doing anything. 3.7. When was that? Friday. Today. Gold on the daily. Is not anything. Gold is there. This little cross. It's been a high of 3.327, low of 3.2. So 97, which is about $30 range. Very, very tight. $30 range. What's the ADR on gold? Gold range is typically about $57 on the day. It's been trading lower. Look, volatility is coming down in gold. Another indication that this bull run is running out of steam, possibly. Yeah, potentially reversing the ADR. 3215. Yeah, but don't do that discovering. Don't pick my one. For that person asked about the momentum meter, just go to indicators, type in momentum, and it will come up. There it is. Momentum meter for top 8 currencies. I had this coded. This guy coded it for me many years ago. I'm sure we've had more than 330 downloads. Yeah, there it is. It's free at the moment. Well, it's free. He coded it for me on MT4. No, I gave him the code on MT4 and he converted it into TradingView. Mostly get chat now to do it for you anyway. Right, folks, that is it. We have just shut the doors on the trade competition for the gold for the week. You've got my view. You've got my view that we're possibly now going to see the stocks. That was last week. Stocks coming into highs. S&P 500 cleared that resistance. Bullish engulfer pulls back into it. All the signs. Risk on in the currency markets. All the signs are for the stocks to be on a risk on week ahead. So for me, stocks, buying stocks, stops below this zone would work for me. Pulled back into the zone, bullish engulfer. In fact, this gulfer takes out the previous 2 days, takes out Wednesday, Thursday, Friday, and we're in decision at the moment, just kicking off. Trade deals, dollar showing some support, currencies, risk on currencies showing some risk on. Everything's building up for a bit of a strong week in the stocks, I think. Gold, oil was up 6% last week. Risk on. Oil is up another 0.5% today. So the picture I'm building is stocks up, gold lower, dollar supportive. I think so. Right, folks, I'll leave that now. Thanks for tuning in. Yeah, thanks for tuning in. Hopefully you found it useful. Subscribe and like if you do. Subscribing does, of course, help us as well. Leave some comments as well. Leave some comments on the YouTube. Well, you've all been chatting away, so that's good. Anything you want me to talk about in particular, come over and join us in our, I think you'll know this anyway, but I'll put it up just in case you don't. You can come and join us on our Discord. Okay, you can scan that, join us on the Discord. I'm in there all day long. There's 2 channels. You've got the private one, which is for members only, but also the public one, which unfortunately does get those spammers in there trying to sell their indicators. Nothing you can do about that, unfortunately. Ban them as much as I can, but they're still in there thinking they've got some right to be able to just pitch their West stuff, what have you. There you are. So yeah, keep an eye on the website here, Funded Trading Plus, for latest developments. Got some really exciting news coming out very soon. I'm not going to spoil that for you at the moment, but we've got some hopefully some exciting news coming out. No current promotions available out there, of course, unless you know me. There you go, 10% off the experienced and advanced programs just by using that now. But there's no current programs. But I asked this just before I came online, if I can have a discount code for you guys. So 10% now gives you 10% off. If you're trading prop account money, there's no need to take that big risk. It's the big risk that kills traders. I've looked at the data. We've analyzed the data. We've got quants looking at the data. We know that big risk means traders tend to fail. If you're trading 100 grand account, you don't need to be taking big risks to make it worth your while. 4%, once you've achieved your profit targets, might take you a month, might take you 2 months. 4% on 100 grand is 4K a month, minus the prop split, of course. On a 200 grand account, it's 8 grand a month. You don't need to be going for broke on each and every trade. So if you haven't considered a prop account in the past, maybe it's time now to think about it. 10% off if you want to use that code for today. If that's not your thing and you want to carry on just trading with your small accounts on your own, that's fine. But don't try and knock it out of the park. You're not going to get rich on a $1,000 self-funded account. I can assure you of that. I've seen it many, many times over the years. Traders just blowing up small accounts because they need to make it worth their while. All right, folks, thanks for tuning in, and we'll see you certainly next Monday. If not before, I say we've got CPI out this week. I'll see what the schedule is like. Keep an eye on the channel to see if we're streaming that live as well. Thanks for that. Have a good one and speak to you soon.